Welcome back. Well, you're still tuned into Halftime Report on CNBC TV 18. Let's talk about a couple of companies now. And in fact, the first management on the show, Poly Medicure, they reported what was a good set of Q4 numbers. Revenue's grown 17% year on year. Margin has increased by around 15%. So to talk more about the earnings, we have with us Himanshu Baid, who's the MD of the company, joining in there. Mr. Baid, thank you very much for taking the time out. This revenue growth, which has been quite strong. First, I just want to narrow in on the domestic business, which has, been quite strong for you. I think it was over a 20% growth that you recorded, and there was a recovery that you've alluded to in the past 2 quarters as well. Just give us a sense in terms of what went right for the domestic business in terms of, say, renal care, your other segments, and what are you guiding for?
See, domestic segment on the renal side has done very well. We have grown around 60% year on year. And that was the guidance we had given in the beginning of the year, that we'll grow by 50%. Then we launched 2 new divisions in cardiology and critical care. So these 2 divisions are very new. We've hired around 70 people in those 2 divisions, but this was the first year, last year. Now this year, I think they will also grow quite rapidly. And that's the plan to also launch our new drug-eluting stent early this year. So all this is part of the domestic business. And this year, I think probably domestic business will grow much faster than the export business. We are probably expecting a growth between 25 and 30%.
All right, 25 and 30% coming in from domestic business. If you could give us a sense on a couple of things. You said renal business has grown well. Yeah. Last year, your target for the full year was 140 to 150 crores. Wonder whether you've achieved that or not. What's your target for next year? And also the cardiology business, what's your target for next year? Along with the margin band. I remember you typically give a 25 to 27% margin band.
So on the renal side, you're right. We have crossed 150 crores of revenue in this current last financial year. And in the current year also, we expect to grow by around 50% again. That's the plan for the renal business growth. Cardiology is very new, but because the base is very, very low right now. But our plan is to probably do 25 to 30 crores of revenue this year, and then grow more substantially in the coming years once we get more regulatory approvals in other markets. But this is just a beginning, so I don't have too much comment on that business, but it's going to grow during the year substantially.
And okay. What about the margins? 25 to 27%? Is that on the cards in FY26, or do you believe it can outperform that?
I think we will stick to that 25 to 27% EBITDA margin for the full year. And I think we'll be very consistent on that. So we'll continue with that, guidance.
Okay, so you're looking for 25 to 27% margins. You're looking for probably, revenue growth of over 20% in your domestic business. The renal business, how much are you looking to probably take it to? What's your eventual target?
We should grow, over 50% this year. And that is what we're planning again for this current FY26 also. So hopefully we should end, around 225 to 230 crores of revenue from the renal business itself.
Okay. Tell us about the export markets now. Maybe if you could touch upon Europe, how that particular business did for you. There were some new launches there.
So Europe is slightly lower in Q4 compared to, let's say, Q1 to 3. And I think we have seen a lot of geopolitical shifts, changes happening in Europe also. So there's a slight slowdown there. But what we are doing is we're trying to recover it maybe through domestic growth, higher domestic growth. But overall, if you look at the full business, we should be looking at around 20% plus over growth for the whole year in the financial year.
That's for the exports business or the overall business?
Could you repeat that again, please?
Is that 20% guidance for the overall business or just the export business?
No, for overall business.
Okay, so that means your exports will grow below 20% because 2/3 of your revenue coming from exports, 1/3 from domestic. Domestic, you expect to grow between 25 to 30%.
See, so exports grow between the current scenario which we see, but I think some things may change as time progresses. But overall, export has been our core focus, core business. But domestic has done very well. I think in Q2, Q3, Q4, we have done very well in domestic markets. So I think we continue to grow, but I think we have some new approvals which are in pipeline, new certifications. So hopefully the growth should come back. But we are probably guiding for export growth to be between 15 to 18% right now this year.
Okay, so export growth of 15 to 18%. Mr. Baid, I wanted to also touch upon the CDSCO license for this drug-eluting stent. You just about, I think, got approvals in place last quarter.
Yeah.
Has that taken off in terms of sales?
Yeah, it has already started. So we've started sales. We have already implanted over 200 plus stents, in different patients. And we have also signed up for a clinical registry where we will do clinical trials for over 2,000 stents. It will be the largest registry in India to be done ever. So we are already working on that. And some lot of other new devices are going to be launched during the year in cardiology space.
So give us, specifically on the stent business itself, how much are you generating and what is your outlook in terms of, say, growth or in terms of other products that you might introduce?
See, I think stent is a very, very new business for us. So it's very hard to guide right now. So probably we'll need 1 or 2 years before we know where we are heading. But we see a huge potential because we have a couple of new designs which we are launching, a couple of new technologies we are launching. So they are very promising. And it's just a start. We are building up the business right now. So it will be very hard to comment, but yes, we should end between 25-30 crores of revenue in cardiology, which has just begun for us. And then we start scaling up in coming years.
And what about the medical devices market on the whole? I remember you had invested about 500 crores or committed a 500 crore investment in production of medical devices. What is the typical revenue run rate on an investment like this over the long period?
So typically, so the 500 crore investment will happen by, let's say, end of FY26 or let's say end of calendar year 26. And so we have already started, working on 3 new manufacturing facilities, again, to augment capacity on the renal. Some of it will go for cardiology expansion, some new devices. So that's already happening right now as we speak. So typically in our industry, investment to revenue is around between 1.2 to 1.5. That's probably how it works.
So you expect about 600 to 750 crores coming in by FY27 or 28?
That's correct. That's correct.
Okay. I just wanted to come back to the renal care business, considering that you're seeing such strong growth. You are installing quite a lot of dialysis machines, if I'm not mistaken. Just tell us about how many probably in a month that you install. Where are you seeing this demand come in? And are you seeing competition in the space? Have exports reduced within the industry simply because there is indigenous manufacturing taking place? And what is the market looking like there?
See, the biggest challenge is in dialysis business is the reuse currently in these devices. And we see that, currently the dialysis filters are used 5 to 6 times in India. The tubings are used 5 to 6 times. And probably that is a big deterrent for the growth in the market. But in spite of all the challenges, because we were the first company to launch such products in the market in India, including the machines. So we have seen a good traction, for making India products. And this year itself, we are targeting to sell around 500 to 600 machines. So typically it will be between 40 to 50 machines a month. And, we see a good traction. And as we increase manufacturing capability and more local indigenized parts and components, I think we'll be able to reduce cost and actually, bid for larger contracts.
Right. And I remember you had some money coming in from PLI as well. You expected revenue from PLI-linked products to be close to what, 100, 150 crores? Where does that number stand?
Input from PLI right now because the scheme was, not very, well designed, I would say. And I've been requesting the government to actually, reconstitute the scheme, but probably that's not happening. So we eventually didn't get anything for first 3 years from PLI from the renal business. So this is without the support of PLI. But I hope in next 2 years, we might get something if we cross certain revenue targets for renal business.
Okay, all right, Mr. Baid, thanks very much for joining in and giving us all of those details with regards to the business. Well, very strong guidance which is coming from the management about FY26. They do expect margins to maintain between 25 to 27%. Domestic growth should be above 20%. Overall growth should be around 25%, led by the domestic business, and renal care would be one of the key drivers there. Those are some numbers on your screen. Car trade tech is up 6.5%, reacting to a 16% growth in terms of revenue. We'll take a break, but Pritesh Mehta will join in to discuss technicals. Stay tuned.